Good morning, good morning, good morning from City of London. My name is Naeem Aslam and I come with a wealth of 15 years of trading experience. During this time period, folks, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader for Bank of America. And on our YouTube channel, on a daily basis, we really give you insights about markets. We filter out the noise and we focus on the price action and the fundamentals that are very likely to push the markets to the upside or to the downside. So we really break down those sort of fundamentals which drive the price action. That is what we do over here. And bit of a disclaimer before we do anything else. Anything which will be discussed in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors. Now, folks, the purpose of doing these live sessions on a daily basis is really to give you guys an opportunity to ask me a question on a day like today. Why am I saying on a day like today? Because today is the most important day. Today we are going to get the Federal Reserve meeting and the decision from that Federal Reserve meeting. Now, the question is, what the heck is Federal Reserve meeting? We don't know what you are talking about. Okay, if that is the question, let me break it down. Let me simplify that. The Fed is the central bank over in the United States. It controls two things, most importantly. Number one, the money supply, and number two, the interest rate. Now, today, because of a coronavirus influence, the Fed crushed the interest rate to the bottom, and it is sitting at an all-time low. Now, the other thing that the Fed did was, in order to stimulate more money into the system, more liquidity, in other words, it started to buy assets on the market. So that is called the asset purchase program. Now, today, both of these policies are very much in focus, because if the bank says that, okay, well, they're not going to do anything today, for the record, it's not that the bank is going to come and then it's going to reduce the interest rate. No. It is about the future policy, the future impact of that policy. But the market is going to factor that today. The reaction, the most volatile reaction for this year we're going to see is today, because this decision is by far the most important meeting for this particular year. So expect massive changes, massive volatility in the stock market, in the Forex market, in the commodity, and of course, to a certain extent, in the crypto as well. So going back to it, what do you need to focus? The Fed, number one, is the monetary policy, which I've explained, interest rate and the asset purchase program. Number two is the dot plot, which is basically the other committee members. Where do they think the interest rate moving going forward? So this is the chart which the Fed produces, and it shows that what the other members think of the interest rate. For example, I can sit here and then I can think, okay, the interest rate is going to go to 0.2% in the United States. You guys over here can say, okay, the interest rate is actually going to go to 0.7%. Someone will say 0.5%. And if we start plotting them on the chart, that is what you call a dot plot. The only difference is we are not the Federal Reserve Committee members. Our decision doesn't really matter. We trade based on the Federal Reserve dot plot which is produced. And that matters to the market a lot, because how the other Federal Reserve Committee members think about that, that drives the market. And of course, if you wanted to learn a bit more of that, I run special trainings on all of these ones. So feel free to ask me more on the comments, or just contact me. Now, in relation to what assets can you trade, on the back of that, they are very, very important. In the Forex market, the focus among investors and traders is going to be on the euro dollar and, of course, on the sterling dollar as well. So both of them, and of course, dollar yen. For the time being, the euro dollar and, of course, the sterling dollar, they have been trading to the downside. Why? Because the dollar is quite strong. Investors believe that the Federal Reserve is going to increase it's going to change the stance, the narrative on its monetary policy, meaning it will become more hawkish, a bit more aggressive. And that's what market believes. Central bank doesn't believe that. Central bank thinks we're going to keep things same. But because of what market believes, we are seeing dollar index moving massively to the upside. and that is pushing the euro to the downside, and of course to the sterling to the downside as well. And the likely scenario today is that this downward trend will continue if the Federal Reserve continues to send the same message that, okay, we are okay with respect to inflation, but the market thinks, no, you are not okay. You need to do something about this one. So we could see massive movements in the euro dollar and in sterling, and of course vice versa as well. If the Federal Reserve, what if the Federal Reserve changes its stance and the Federal Reserve says that, look, yes, we have seen a very good recovery in the United States, and now is the time to change our monetary policy stance or the narrative. Guess what is going to happen under those circumstances? The euro dollar and the sterling dollar can really plunge. Now, what other assets? Of course, this is a huge topic. It's a very big topic that you need to understand. But the Federal Reserve meeting is the best opportunity in terms of volatility to trade, because everything really moves. Now, what other assets can move is your stock indices, such as the Dow Jones Industrial Average, such as the S&P, and of course the Nasdaq. Now, we do know that the S&P and the Nasdaq, they have been consolidating very much for the last few days. Yes, I agree. We are seeing that upward momentum in terms of both of them, but that is not really that strong. So what we are likely to see, if the Fed from them on the back of this one, is higher volatility in these two. So keep an eye on both of these two averages as well. Now, from there onwards, we move on to gold. And earlier today, I have done a video on technical analysis on gold prices, really explaining and breaking it down for you guys. Where are the opportunities to go to buy or perhaps to sell? What to look for that can indicate to you guys that, yes, gold prices are likely to go higher, or whether the gold prices are likely to move to the downside. Again, all that information is in that particular video. So let's count. The countdown is on, and let's see what the Federal Reserve will do. And that would be the primary focus among investors. Apart from that, in the crypto world, what I am really seeing is the Bitcoin price is somewhat struggling now. Why am I saying that? Because if we look at the 4-hour time frame on our platform, the price has refused to stay above the 50-day simple moving average. The price rejected that simple moving average, and that makes me believe that the prices are highly likely to move to the downside from here, and perhaps that the next support could be between 52 to 51,000 in terms of a Bitcoin price. Finally, about oil prices are very, very intriguing, because IEA, that's an official body, it came out and it gave its price supply projections about oil prices. So that is really triggering the prices to the downside. Where do I think the prices are going to go? I think the immediate support in terms of a crude oil is really about 62.95, and I believe that the prices can really go towards that side. If it breaks that support, then we are really looking at 58.75, where the 50-day simple moving average is trading on the daily time frame. Do let me know your thoughts on these ones. RSI is dead. I don't know what you mean, RSI. What are you referring to, RSI? But thank you for the comment. It's a great comment, because you are talking about RSI, and that says that you are paying attention to important indicators in the market. But if you will say that RSI in relation to what particular instruments, then I can understand more. But yeah, RSI is certainly very, very important instrument, and as a trader, you guys should pay attention to that. Right, okay, so that's all for now. Thank you so much for watching this, and if you like the substance in here, please smash that like button, and also click that small bell icon, because that will give you notifications the moment we start going live on here. That's all for now, folks, and I'll see you guys next time. Bye-bye.